Welcome back to the Crypto Power Hour, the #1 crypto show on Rumble. I never get tired of saying that.
Whoa.
Of course, powered by Solana Global with your hosts, Antonio Moss, the Crypto Queen, and the Crypto Bros, myself, Lance Bigliaccio, and of course, George Balloutine.
Lance, did you say #1?
#1. Exactly. #1, baby. Never gets tiring. That's right. #1 crypto show on Rumble. Rumble's our home base. Exactly. At the end of the day, of course, Crypto Bros, myself, Lance Bigliaccio, and George Balloutine. This is your ultimate deep dive into everything crypto, blockchain, and decentralized finance. Whether you're a seasoned investor or just stepping into the world of digital assets like many of us, we bring you expert insights, top interviews, exciting new projects, breaking news, and game-changing innovations shaping the future of digital assets. No hype, no fluff, just real talk, real strategies, and real opportunities in the world of crypto. Because on this show, in Crypto We Trust, we're back in the saddle. Antonio Moss, fresh back from the UK. I don't know if you're jonesing for that lousy UK weather yet. Is it too much sunshine in Florida for you?
Well, quite literally, it changed as I evacuated the premises. So I was in San Francisco since we last spoke together on the show. Been in SF, flew into Palm Beach this morning. And yeah, happy to be back, albeit on a little bit of sleep deprivation.
Yeah, you only got an hour worth of sleep. Huh? That's rough, man.
Ordinarily, I'm like good with that. But, for the Crypto Power Hour, it deserves more.
Yeah, it's tough. I mean, whenever you're traveling internationally, it's not easy. And I remember when I lived in California, I lived in San Francisco, actually.
Oh, no way. I didn't know that.
I was disappointed in the weather there also.
It's foggy. But
it's
for me,
foggy,
I'm like...
And surprisingly trickly cold. It's tricky. You look out the window, it's super sunny, you get outside, and you're like, son of a gun, that wind coming off the bay is always rough. I was kind of shocked. I had visions of California girls. I was single back then, California girls and California sunshine. And what I got was not even close, although I did there was parts of it I loved. I used to go to Skoma's on the Wharf, one of my favorite places to eat. I lived on Flying Fish Lane in Foster City. I remember the name because I thought it was a strange name for a city. George Balloutine, what's up, bro?
It's foggy.
Okay.
It's foggy. Yeah. You know what, Lance? That's the second show of the day. It's 3:00. We're going to get this show going. You know what I say, right? Where we're going to break down the world of money, markets, crypto, and everything in between. That's what we're going to do here in the Crypto Power Hour. Plus, when I say everything in between, we talk about education, talk about everything.
Absolutely.
And who better to do the education than beautiful Antonio Moss, the Crypto Queen?
Yeah, there's no doubt.
Oh, wait, Lance.
Yes, sir.
Queen wave. Sorry.
Ciao.
No, that's it. You got to have the Queen wave.
Hello.
Whenever we got people on from the UK, you got to throw up a Queen wave. All right, listen. So if you're joining this show for the first time, clearly enough, you're in the right spot. Doesn't matter whether you're a seasoned investor or a beginner. We try to break it down. We always start the episodes with some sort of education, but you will get great interviews and lots of other information about new projects, things that are important in the news cycle. And, we're trying to help you get on top of generational wealth. That's what part of the education's about because, of course, many of us, and believe me, even George, myself, and Antonio, we're out on the internet. We see some kind of new project, some new AI meme coin, some new blockchain or DAO project, and we're like, what the hell is this? I've never seen this before. Things are moving so rapidly that you have to tune into the Crypto Power Hour. There's a reason we're the #1 show on Rumble right now in the crypto sphere. Join us every Wednesday at 3 p.m. and every Friday at 3 p.m. All right, Antonio, I'm going to throw you the ball with your 1 hour of sleep. Do what you can. We have some sympathy for no sleep because nobody likes that. Go for it.
It's fine, we roll. But yes, thank you, Lance. It's the education piece, which is my favorite little slice. As always, please drop anything in the comments if there is something you have heard, want to hear about, learn about, and we'll try and do our best to help. So today, the education series is going to focus on risk. And we've touched on risk embedded in different conversations about market updates, etc. But now we're going to really deep dive. This follows our episode last week on how value moves in crypto, where we spoke about tokenomics, to yield staking to NFTs. So if you're interested in that and haven't watched the show, please watch it. It was a good one. So yeah, today we'll really go into how crypto, alongside opportunity, does carry real vulnerabilities. These can be technical, financial, and also human, because it opens up a lot of opportunity. You're responsible for your own operations in some instances, and that brings risk. So yeah, we'll go into scams, hacks, regulatory pressure, and structural risks you may not see until they hit. So first mini piece is scams, hacks, and behavioral risks. So this is probably one of the most common risks in crypto, which is scams. This is what we hear about on the news and what probably freaks people out. So it is apt that we dive into it. So this can range from like phishing sites to fake token launches. And, you know, they do pop up. So what makes it especially difficult in crypto is that crypto still is trust-based and doesn't really have the safety nets of traditional finance. It can be a good thing, but it also does leave it vulnerable in some regards. So, you know, if there's no undo button based on the infrastructure. So Lance, I guess over to you. From what you're seeing, like what are the most common attack vectors right now? Where do you think people are most exposed in the whole crypto ecosystem?
You know, I think it's complicated. Of course, George and myself, we spend a lot of time on social media, and I can't say that even myself couldn't fall for one of these. There's a handful of categories. I think there's really 5 key ones. First, you've got phishing, of course, where people on social media and messaging apps, they impersonate trusted figures. They pay for people to promote. They'll pay for a post to promote their program, right? And they'll use a company that maybe is a verified organization or that has verification, so it's more credible. You know, it happens on X, Discord, Telegram, WhatsApp. It doesn't matter which one. And they'll try to get victims to get involved in fake airdrops, support pages, or token pre-sales. One wrong click and you're shit out of luck. You know, that you can get your wallet drained. Then there's the fake wallet drainers. Those are all the malicious browser extensions, D-apps, or Wallet Connect promotions. George actually saved us one time from doing one of those. I thought it might be an opportunity to learn more. And he said, hey, what if this? And he was right. It was a fake program. So signing these transactions, all of a sudden you're silently approving full wallet access. They'll tell you you're going to get a free, you know, maybe a free program that will help you, you know, trade crypto at high speed trading, or maybe it's a bot they've created. Supposedly do it. Pump and dumps. I mean, those are some of the worst of those honeypot token scams. They're launched with hype and a bunch of fake liquidity. And of course, people get rugged. Programs so the only creators can sell. So there's no liquidity when you go to sell and you're trapped. And then all of a sudden you've got a big wallet full of worthless coins. And then impersonation of exchanges or projects. You know, there's a bunch of cloned websites out there where legitimate platforms, or even those fake upgrades you need to re-verify for MetaMask. All right, those, of course, are used to steal your seed phrases. And, you know, it's not just your password. Those seed phrases, that's the end of the game. If somebody gets your seed phrases, they can drain everything you got. There's a bunch of exploit-based NFTs and DeFi traps. Those are where smart contracts exploit, or they backdoor mint links that are embedded in the fake NFTs. Lots of crazy stuff, sophisticated stuff that's very difficult. So sometimes your best thing is just not to do anything. And I think where people are most exposed, you know, anywhere trust is assumed too quickly, you have to think about that. Social media, airdrop sites, and wallet interactions. And of course, it's whenever a user, your most dangerous moments are when you're signing into your accounts for transactions that you don't fully understand. Because once it's approved, it's done. It's irreversible. So I think you have to keep all of those in mind.
No, that's so interesting. Like the stakes are so high because once it is approved, exactly, there's no going back. Really interesting as well about the cloned sites and the kind of different layers to it. And yeah, I guess building on that idea of trust, George, what do you think in terms of people seeing scams or things going wrong in crypto as potentially technical failures? But, you know, sometimes they are behavioral. So what do you think some of these traps are, like psychological traps people fall into? And what do you think people should be doing differently?
Well, psych is my thing because I'm a psych major too. So listen,
I didn't know that.
Yeah, a lot of things you don't know about me.
I need to learn. Sorry.
That's okay.
Cool.
So, crypto's, it's not just technical failures, right? There are 100% behavioral hacks. Scammers are always looking to exploit your weakest possibilities. Blockchain might be decentralized, but human emotion is still the biggest vulnerability, and we see that a lot on social media. Now, one of the big things is, I say FOMO, fear of missing out. I'm going to miss out on the next big thing. I got to just do it without thinking. That happens a lot. Scarcity is weaponized, right? They say, only 100 whitelist spots left, or this sale ends in 1 hour or 2 hours, whatever. And they want, the trick is they say that just to get people to rush in without really looking into what they're getting into. So vetting, we'll say. And then, listen, greed. People get that. They get rich quickly. Everybody wants to get that mentality of, I'll make $1 million overnight. I know you'll see people put up posts, I made this last night in 5 hours. And, what's always the thing they say? They promise what? 10 times your return in just overnight?
Yeah.
That's interesting. When people see others posting fake profits, what happens? Their judgment just goes another way, and all they see is the money sign. So then, another thing is social proof bias. If it looks like everyone's doing it, and it's especially influencers, and I'll just use one, the Haktua girl. She didn't know what she was doing. They took advantage of her, right? And then they put all these groups up, and there you go. It must be safe because she's doing it, or it must be safe because President Mealy said it's okay, or it's a good thing.
Herd mentality.
Right? So, and I'll give you an instance. So, let's say an X, someone's putting, and it's a legitimate, a guy puts up a crypto thing, he's picking 10 people, and you reply, he says reply. And there'll be, you'll say you'll get a Telegram message, but there'll be another account, somebody that impersonates that account and tries to trap you into it. They tried doing that to me. That's the thing Lance was just talking about earlier. And I looked into it, and then I reached out to the person that actually put the post and showed him. He's like, no, that's not me. So you can always verify before you do things. Sometimes if it's too good to be true, it's too good to be true.
It is. Yeah, no, it's, you make incredibly good points there. I even see on my social media accounts, like Instagram a lot, there's all of these accounts trying to sell you things and, promising massive returns and all of this. And then quite aside from my friends' accounts, potentially being hacked, and you absolutely know, because why is someone I hardly know from school 10 whatever years ago messaging me about a crypto deal? But there are just these influencers which look like they're living a really great life.
Yeah,
who
the big penthouses, the fancy cars, and that's where that FOMO comes in, right? The greed comes in, and that herd mentality, because you're like, well, if they can do it, I can do it. And there is a lot of that. There is a lot of that. And then they create that whole urgency and fake giveaways and the support. And you're right. There are people's accounts. Even my wife, her account got hacked on Instagram. And at one point it was sending out all kinds of promotions for a crypto project.
Yeah, it happens a lot.
So to add something like that, to protect yourselves on your social media, always do two-step verification, whether it be an email, your phone number, or authentication codes. Do that, because it will make it very difficult for someone to hack in. And they tried hacking into my Facebook because I had all these security steps. Facebook just locked my account. Actually, it took me over a month to prove that I'm who I am, because they take very precaution. I understand the process is a process, but thank God my account they weren't able to get it, and I have my account back. But always verify. Take your time, verify. If they want to rush you into something, then it's probably a scam, because always do your due diligence, and never trust a screenshot or DM. Verify with the official source. It's always important.
Yeah, I think also, just to close out that first mini section, we're bringing this up to basically flag things to look out for, so you can protect yourself. Use the tools available. As George, you say, there are these factors in place. which work quite well. I used to be a type of person, I'd have the same password across everything, and it's just silly. You just, take responsibility for that, and then you'll be safe. And watch out for things that...
One more thing.
Yeah.
Nothing is ever free. Fake giveaways, when they say, they're giving away this, nah. So be very mindful of that. Nothing in life is free.
We'll be fine though, guys. Watching the Crypto Power Hour, we'll all be safe and happy.
That's it. That's right. Tune in here every week. If you like the show, don't forget to thumbs up, comment, share, like. Take the short form and the long form. We don't care. Let's spread the word and let's get everybody involved. Generational wealth is an opportunity as long as you're safe in the process.
Exactly. Okay, so on to the next piece, which is regulation and jurisdictional. It's a tricky word for me. Risk. So we've spoken about regulation a fair amount in earlier episodes, specifically about stable coins, everything happening with US regulation, exchanges, and how value moves through the system. But today, we really wanted to go into regulation, which could be, through the lens of risk. So, in crypto, the rules are not always clear. It's an early industry. That uncertainty can expose users, investors, and founders alike. So different people who operate within the ecosystem. So where your platform's based, how your token's classified, and which regulatory regime you fall under, they can really impact whether your funds are accessible, protected, or, if there might be a freeze or something like that. So regulation really affects how an individual will experience and operate within crypto. So right now, the global picture is uneven. The US is still operating through enforcement. But, regulation, as we've discussed on the show, is developing over time. Europe's rolling out a structured legal framework, and then you have jurisdictions in between, which, some are very fast moving, and then the flip side of that might be they don't hold much consumer protection. So that legal fragmentation in and of itself can be a risk. That's why I think it's so great here in the US. I say as an English person, but I'm here in the US. That the regulation is coming into play because it gives people a rule book, and most of the market, I would say, appreciates that. So I wanted to go into a couple of case studies, first being FTX, to show the risk of regulatory gaps, and then on the flip side, Mika, which shows what regulatory clarity could look like. So firstly, FTX is one of the most visible examples of what happens when regulatory clarity is missing. Despite appearing reputable and widely used, it was registered in the Bahamas, operating across multiple regions and heavily targeting US users. When it collapsed, the legal protections people kind of assumed because it was so widely used were there, just evidently were not. And the jurisdictional structure made it difficult for users to understand what rights they had, and recovery had been slow, uneven, confusing, etc. So it kind of shows that people shouldn't just go with the status quo, as you say, Lance, herd mentality, and actually understand what regulation is in place surrounding your operations in crypto. This left millions of users exposed because the legal system wasn't built to handle what had been created. So clear regulatory failure, but shows the dangers of hype and not analyzing for yourself if regulation's not there to see what is actually in place.
I got to comment on that for a minute. Yeah. I mean, anybody with any kind of common sense could have looked at that sloppy, disheveled looking SBF and thought to themselves, can this guy really be one of the richest guys in the world? I mean, walking around in those dirty ass shorts, his sloppy t-shirts, and his nasty fucking sneakers. I just can't imagine how anybody got sucked in by that kid. To me, walks like a duck, talks like a duck. It looks like a freaking duck. That little dude did not look like one of the guys that had figured out the entire system. And he seemed to be living his life in a very odd way with all that, what do they call that, polyamorous relationships, where he's in a house with a bunch of people and they're all kind of creepy looking and they're all sleeping together. I don't know.
But it's we're taught really not to judge. Don't judge a book by its cover. So that's why, like talking earlier, research, look into it. Because there are people that are billionaires that you would never, just by looking at them, you would never think they're billionaires. They just have regular. Hold on.
I listened to him talk a couple of times. Did you ever listen to him at public speak?
That's why I just said, don't judge a book by its cover. Research it and look into it.
No, he wasn't a good. Yeah, he wasn't a good public speaker either.
No.
He did not seem highly articulate.
Some people that are brilliant, though, are not good speakers. Look at Elon Musk. Elon Musk is brilliant, but he's not an articulate speaker.
I don't know, but when Elon Musk speaks, he does have a lot of really intelligent things to say. And it's not because I hear what you're saying. He's on the spectrum, Elon Musk, there's no doubt. And I think a lot of people that are hyper bright are on the spectrum. SBF did not come off like he was on the spectrum. He came across to me like a sloppy college kid that was running a sham. I never really bought into it. Not that I was wise enough to see how ugly it really was, but he did not seem like the guy that the public had bought into, where he was speaking on TED Talks and everywhere else like he was the ultimate expert. And there are some, look at David Schwartz. David Schwartz, you could look at him and think, oh, this guy doesn't know anything. But when David Schwartz opens up his mouth, you're clearly impressed by the level of intellect that he actually purveys.
Yeah, I mean, I agree with you, George, in that, you never know what's going on in like an iceberg person. They might not seem like much on the surface, but they've got a lot going on beneath it. But also to your point, Lance, it's quite scary how herd mentality operates in practice.
Yeah.
Like people don't, they might have their reservations. I'm just talking opinion-based here, but have their reservations, but then they see a critical mass supporting something and they're swayed. So,
another example, I'll just look at Bernie Madoff. He talked the part, he played the part, he looked the part, but he was a big, look at that. But
Madoff was believable. I mean, when that guy opened his mouth, he sounded like a genius. My thing is, walks like a duck, talks like a duck.
That's the whole point
of. In the case of SBF, talks like a retard, walks like a retard. It's a retard.
That's the whole point of don't judge by a book by its cover. You have to do your due diligence and research.
Yeah,
that's
no
it.
doubt. Okay, but still be on the retard watch. Okay, go ahead, Antonio.
No, I mean it's kind of like a double bluff, isn't it? Anyway, so then we've got, in contrast to shady stories like this, fixed regulatory frameworks, which we've seen in Europe for a while now with MiCA. So this is kind of a benchmark for what regulatory clarity could look like. So this is, the EU markets in crypto assets regulation. It's far from perfect, but it does one thing well, in that it provides structure, which I think the industry is craving and hopefully getting pretty soon. It defines different things, like ranging from what a stable coin is, how platforms need to operate, and what protections need to be in place. And that kind of clarity really does lower risk, it not just for institutions, but for everyday users too. If a platform is MiCA compliant, like Solum, users know what standards it's held to and who's accountable, and that really gives trust in a new industry, which is even more important. So MiCA may move slower, but it does create confidence. I mean, Lance, just to follow up to you here, we've spoken a bit about regulation globally, through picking up on the US and MiCA, but do you think we're any closer to regulatory alignment globally, or do you think that, different places are just navigating their own system? Like, how do you see that moving in the next kind of 12 months and onwards?
My take is there's no doubt we're still stuck navigating what I would consider a patchwork of regulation globally. And to be honest with you, I'm not positive we want fully regulated, global one world order kind of, legislation. I'm not sure exactly how we would even do that, but if we were going to do it, doesn't that go against everything that decentralized finance is? Yeah. Isn't that exactly why we're in decentralized finance and why the crypto world has got this draw to get away from government control? But at the same time, nobody wants to be jacked, right? We don't want rug pulls. We don't want SBF running around in his dirty shorts, stealing people's money and giving it to the politicians. I think we need some alignment. But is there ever going to be true global regulatory clarity? I think it's a long way off. I don't know how you'd even streamline that. I mean, on the one end, you could end up with heavy-headed, handed enforcers like Gary Gensler, the little weasel. I know he's out of there with the SEC. We're rid of him. But look, where's the regulation? I mean, it wasn't by legislation. It wasn't by actual laws. They were misapplying SEC law to try to control the crypto industry. And it was really being manipulated by lawsuit, right? Now they're stopping some of that. We see the end of it, but instead they're going to apply statutes. Hopefully the statutes aren't going to be the same heavy-handed policy. I think, jurisdiction's always going to be a problem. It doesn't matter whether you're in United Arab Emirates or Singapore and parts of the EU. They're trying to build framework like MiCA to encourage growth while maintaining oversight. And I think oversight's necessary. But, I'm kind of, there's a lot of countries that we're going to be looking at that are kind of the wait and see players waiting for the other countries to make decisions. Latin America and Africa, part of Asia, they're watching others make mistakes before they move, which is probably smart. We've already seen a lot of mistakes, but the fragmentation is going to be still complicated. Look, you've got you've got lots of different exchanges. You've got lots of different systems. We've got Web3 protocol and soon probably going to see Web4. AI's and I don't know how you could, organize that, right? You got a bunch of major exchanges and protocols, with geofence or regionalized to comply with the local rules or local laws. But then, of course, people can use all sorts of ways to get around that. I hope, to be honest with you, that the legislation stays fairly loose, although I don't want to see the continued scams going out there or the hacks. And with AI and quantum computing, that's a real issue. We're going to have to look at that. I think this is an evolving situation, and I don't know if it's going to ever be unifying.
I think I agree with you. It's like, what is the whole point of everything? If you have some global benchmark that everyone rigidly ascribes to, then you kind of defeat the object. But I guess it does point to the fact that because different jurisdictions have these different rules and laws and regulations, it's just important for the consumer and end person to really understand what affects them, and they might have to do their own education on it.
I think in this market, you have to stay agile. Yeah. You have to educate yourselves. That's why you're here on the Crypto Power Hour. Hopefully you're going to educate yourself about these different markets. George has talked about it so many times till he's blue in the face about how complicated it is to buy so many of the coins, because there isn't any necessarily regulation. Of course, some of the exchanges aren't even approved in the United States. So you end up trying to find exchanges. Maybe it's not the exchange you want, but because this one isn't approved. I think at the end of the day, the education is number one, and you think you have to expect the rules to change. And I think the rules are going to be changing a lot over the next 5 to 10 years, because I think the other part is the regulation community and these world governments don't necessarily really understand blockchain. They don't understand cryptocurrency or decentralized finance. And secondarily, you've got the Federal Reserve. They don't want decentralized finance. They want to control people's finances. That's what the Federal Reserve is all about, controlling monetary policy in the United States, controlling the currency with a fiat currency. At the end of the day, do you really think they want decentralized finance with very little regulation? Because let's face it, no regulation creates volatility, and volatility creates opportunity.
I love that. Very fair enough. Yeah. George, how long do we have in our little education piece? I'm concerned.
No, don't worry about it. We're done when I say we're done. We need to educate. People need to know, so keep going.
Okay, good.
I think it's great. Don't worry about it. Just rock and roll. Keep going.
Fantastic, because we've got our third and final section, which is on systemic risk and infrastructure weaknesses. So this is going beyond the individual level, and this is looking at the structural risks in the system itself. So we've spoken about smart contracts. That's one of Solan's key mechanisms, and smart contract vulnerabilities, protocol failures, and exchange insolvencies. So these are things that are not where a human's being tricked, but the structure itself has got a problem. So even if you do everything right on your end as a consumer, you still might be exposed to risk in the system, depending on the infrastructure you rely on. So George, over to you on this one. How do you think users should think about smart contract risk and platform reliability? Is it something they should be considering? Is it, compared to the risks of other systems people use in day-to-day life, is it actually that much of a big issue? But if so, what type of things should we be preparing for? There's a bit of a mouthful there, but something along those lines I think could be helpful.
When it comes to smart contracts and platform reliability, users need to stop thinking in terms of if something will fail and start thinking in terms of when and how. Even major protocols aren't immune. And this is how we should break it down. So smart contract risks, right? Even battle-tested contracts have bugs, right? It's there. Some of the biggest hacks, like the DAO, Wormhole, or Curve, were in shady projects that were highly respected ones. These are like hidden vulnerabilities in code, right? Oracle manipulation that skews pricing. I mean, there's always something there. And then you have platform reliability risk. Centralized services, even wrapped in DeFi shell, can throttle withdrawals, pause activity, or change terms, right? Going down peak usage like we saw with Solana outages, or when exchanges halt trading during volatility. You've seen that in Robinhood, right? They suffer from internal corruption or mismanagement. And we were just talking about this. Look at FTX. Then you have dependency stack failures. Many protocols rely on other protocols. So protocols rely on protocols. If one layer breaks, like a stablecoin depegging or a bridge being exploited, it can ripple across the entire ecosystem. Now, how should you prepare? I'm glad you guys asked. Use reputable audits, but don't trust them blindly. Audits are snapshots, not guarantees. Spread risk. Don't keep everything in one protocol, one wallet, or one chain. You can use a few. Use a bunch of wallets. And
diversification, no doubt.
Stay informed. Follow the dev updates. Monitor for government's proposals. And always, always understand what you're signing or approving. So even in major protocols, decentralization doesn't mean invincibility. It means you are your own safety net. So act like it. That's, that
was inspiring.
Oh, thanks.
George is getting all pumped up over there. Did you see him?
I'm telling you. Well,
No, I thought it was good. It's like your own responsibility. Well, I said that wrong, but whatever you said sounded good.
Listen, I think when anybody looks at an institution, doesn't matter whether it's a bank, doesn't matter whether it's a brokerage firm, doesn't matter whether it's a broker. I think you're always responsible for your own investments. At the end of the day, I think it's common sense has to come into play, and that's where you have to take your emotional response out a lot of times, kind of like this recent sell-off. I mean, all George and I did was buy more. We didn't really, because we feel like we're in a bunch of good programs. We feel like we're in coins and projects that we believe in. So there's no reason to be panicked because the market's panicked. At the end of the day, yes, sir.
How much money did you spend on mine?
Uh-oh. Let's go. Next question, Antonio.
I trust you with mine, Lance. I'll give you £50.
Yeah, exactly.
£50.
I know, I'm a baller over here.
Big baller, shot caller. All right,
20
Antonio.
Blades.
I'm gonna let you close out this segment and before we go to break. So let it rip, girl.
Well, you know what, guys? I love the education piece. I really hope we've learned a little bit more about risk. And it's key to kind of know that this is just about having more knowledge. As an industry, the infrastructure of crypto at large is way safer than so many industries that we as individuals trust. And we're purely here to help educate you so that you can put your best foot forward and thrive in this very fun new industry. So thank you, George. See you in the next half. How did I do?
No, it's great.
We're doing good. Listen,
I want to close in this. Just remember this. Don't invest in code. Invest in trust. Of course, transparency and resilience. Institutions that are skipping due diligence aren't audited financials. Don't let that FOMO take you over. Stay away from that emotional stuff because it will definitely hurt you. You'll take a loss and then watch that coin go back up. Do your homework. Educate yourself. The Crypto Power. I'll be right back with Antonio Moss, George Balloutine, and myself, Lance Migliaccio. #1 crypto show on Rumble. Stay tuned. We'll be covering some great news and some great projects. Don't forget to hit the thumbs up, like, comment, share, the subscribe button. If you can do the paid subscription for $5, please do. Tough economy, we understand it. Just subscribe if nothing else. We appreciate the support. We'll be right back.
American who keeps up with the real news, you know by now the severity of the economic issues that are plaguing our great nation. My name is Jonathan Rose, and I'm the CEO of Genesis Gold Group, the only major faith-driven company in the industry. 2024 is a year full of uncertainties, with trillions of dollars in national debt, inflation impacting your savings, and a pivotal election year. Your peace of mind is more valuable than ever. Now is the time to use physical gold and silver to preserve your hard-earned retirement savings with a gold IRA. Call Genesis Gold Group today. Our team has decades of experience helping folks just like you take their first step on the path to true financial freedom with a gold and silver IRA.
Call Genesis Gold Group today at 1-800-200-GOLD for a no-commitment, informative consultation with one of our experts to find out if we can be a fit for you. Call now at 1-800-200-4653 or visit genesisgoldgroup.com.
In a world of uncertainty, be prepared with Silver Prepper Bars, your ultimate hedge against political instability and economic turmoil. Introducing the Silver Prepper Bar, crafted from 0.999 pure silver and proudly made in the USA. This tangible, divisible asset can come in handy even in the toughest of times. Portable, perforated, and easily tradable, the Silver Prepper Bar is your lifeline in times of crisis. When facing inflation, currency devaluation, and financial meltdown, Silver Prepper Bars provide peace of mind. Don't wait for disaster to strike. Secure your future today with the exclusive Silver Prepper Bar, the only silver bar on the market divisible into 3 different size pieces for maximum utility, all while fitting in your wallet. The smart choice for savvy investors and preppers alike. With Silver Prepper Bars, you're ready for whatever tomorrow brings. Hi folks, I'm here today to introduce you to the Prepper Bar from PrepperBar.com, the most unique precious metals product we have seen in a long time. These 62-gram bars are perforated and easily broken down into your choice of 3 different sizes to fit a multitude of needs. Whether it be from asset protection from inflation, economic turmoil, or its unique utility for barter and trade, the Prepper Bar makes a perfect gift for all the precious metal lovers out there. Exclusively made here in the USA and selling out fast. Available in both gold and silver, these slim Prepper Bars fit neatly in your wallet, and their utility enables use in any situation. As gold and silver prices continue to surge and top economists predict upcoming shortages, now is the time to secure your precious metals in the form of Prepper Bars. Go to PrepperBar.com now and place your order before supply runs out and prices go up. All payment methods accepted. Order your Silver Prepper Bars now at PrepperBar.com. Silver Prepper Bars, ready for whatever tomorrow brings. Order now.
All right, welcome back to the Crypto Power Hour, where we break down the wild world of money, markets, crypto, and everything in between with your hosts, Crypto Queen Antonio Mas, and the Crypto Bros, Lance Migliaccio, and yours truly right here, George Balloutine. But we have big things going on right here. XRP defies market outflows as investors flee Bitcoin and Ethereum funds. Whoa! While the crypto markets face its most dramatic capital exodus on record, Lance, this is big. $789 million in outflows from major digital asset funds last week.
I think it's actually higher than that number. We got this number in the last 24 hours, but I heard it was more like almost 900 million, so getting close to $1 billion.
Yeah, right. XRP emerged as the lone bright spot, recording positive inflows of 3.5 million. Wow. We got CoinShares attributes the broader market to geopolitical uncertainty. Wow, this is big, Lance, right?
Yeah, I think, of course, it's Donald Trump's shifting tariff stance that kind of did this, but I think it's also what we've talked about on this show. And remember, it's never any financial advice on this show. We want you to go to your own financial advisors and your experts. What we're trying to do is offer you the version. Now, I don't know if Antonio owns any XRP, but George and I do own an XRP. And I believe that when you look at XRP, it's all the agreements and contracts they have. It's the new ETFs coming online. I think the reason we're bullish is because Ripple's $1.5 billion acquisition of Hidden Road. The opportunity for XRP, that's a major institutional brokerage. They're processing, I think, over $3 trillion in annual transactions. If XRP becomes the predominant coin of choice for those transactions, which is what taking over Hidden Road's all about. You're talking about 3 trillion in guaranteed annual transactions through the XRP and Ripple platform. This is huge. There's a reason, and I've said it many times, I'm not negative Nelly on Bitcoin. I'm not negative Nelly on Ethereum. But here's my thought, especially on Bitcoin. It's an early protocol. It's Web 1. It's an antiquated, transactional backbone. I know a lot of people are maximists, and I'm not trying to attack them. I think Bitcoin's going to be strong for a long time. But do I think Bitcoin's here forever? I don't think so. My take is it's not here forever. And I think there's going to be other coins coming in the market like XRP that they're defying the trends. The fact that they gained 3.5 million in inflows lets you know that the institutional money and a lot of the investors like myself and George, we're part of that 3.5 million, not a big chunk of it, but we did buy more XRP on the dip. And I think it's an opportunity. I mean, I believe that XRP Ledger processing all of Hidden Road's transactions is going to be a big deal. Even if you ask any of the AI, they continue to say that XRP is undervalued, whether you use DeepSeek or ChatGPT-4 or Grok even. So I think this, you got to look at the XRP Ledger. This is a decentralized blockchain network, and it's designed specifically for fast, low-cost transactions using XRP, which is perfect for this new acquisition. And it's a great bridge asset. So I think when you start talking about the velocity of money, it doesn't surprise me the outflows of Ethereum and Bitcoin. They're on slower transactional systems. Ethereum, of course, has more infrastructure than Bitcoin does. When you get down to it, I always ask myself, does the blockchain need Bitcoin? My response is no. Does the blockchain need Ethereum? My answer is yes. Does the blockchain need XRP? Yes. Currently, they do. So when you look at that and then you add these new ETFs that are debuting, George, I think this is big. I mean, you guys tell me if you think otherwise.
Well, look, XRP, the acquisition positions Ripple as what? As the first crypto firm to own a global multi-asset prime broker. And this is signaling what? A shift from niche remittance to institutional infrastructure. And when you have infrastructure, that means you have clear a view of how they are running their company. You can't have, look at a construction project. To build a project, if your infrastructure is not there, your project's not going to build. And just like that with any company, it enhances XRP's utility in high volume financial flows. So, can't go wrong with it. I think it's going to be the future. Just look at XRP, the ETF launch. Right? It's meaningful. Yeah. It signals a growing institutional curiosity in Ripple's ecosystem. And it's bolstered by strong debut and the broader wave of ETF filings. So,
yeah, Tukrium brought that out, and they're not going to be the only ones. There's lots of other people preparing to file on XRP ETFs. And I think when you start looking at some of this, you have to look at the circulating supply of XRP. It's 58.33 billion. And of course, there's a 10% lockup on that. So you're only really going to get a 52.49. And so a lot of people are saying the velocity assumed by this acquisition could be that each XRP is getting used 10 times a year minimum. So that's a 300 billion market cap at 3 trillion times divided by 10% velocity. So a lot of people are saying that base price at a minimum is 571 and could potentially meet 28.55 per XRP by year's end. That's a big number when you start talking about that. And of course, XRP is now taking all over Hidden Road's volume. So I think you have to ask yourself, and this is for you, Antonia, even though Bitcoin and Ethereum saw massive outflows, XRP gaining traction is a big deal. And of course, I think what makes XRP resilient right now compared to the rest of the market? What are your thoughts?
Yeah, no, I agree with what you were both saying. Lance, obviously, the tariffs have freaked out the markets generally, which is why we've seen big outflows. XRP through, Ripple's acquisition of Hidden Road, that gives transaction volume, even if it's not fully realized off the bat, somewhat, capitalizing on that transaction volume is a huge piece. It might not be affected as much by macro uncertainty because it has this use factor. Whilst institutions are kind of pulling back, it's seen this quiet strength, let's say, because it operates on fundamentals. And as well as what you say, George, like the fact that it has this leveraged ETF as well, it's kind of bolstering the XRP story. I think and
how about the 3,300 contracts that the SEC wouldn't let them divulge that still haven't really been released, that we know are done with governments and other institutions? That's another piece that, that's kind of that's the elephant in the room that nobody's talking about.
It seems like to have not weathered storms, because it never seemed like it was faltering, but it has had a few, bashes to it and remained robust and come out on top. And I think that's really testament to its fundamental nature and structure and use case. It's not just a whim, it's here to stay. The question of whether it will reach, that 28.55 valuation is, that's potentially a little bit optimistic. In my view, it's possible if everything aligns, perfectly well, and it's great. But, that really relies on if XRP handles 100% of Hidden Road's transaction volume,
doubt.
Which might.
But I will tell you this: a little bird told me that XRP is in the middle of looking at 2 other major acquisitions.
Oh, wow.
So there's a bone for the audience that this is just the tip of the iceberg. George, I got to say that you and I have talked about XRP and the momentum, and I think this is signaling a shift in the digital asset landscape. We know that XRP is going to be part of the U.S. strategic reserve. We've heard there are other governments looking at making XRP part of their strategic reserves, and these are some major countries that are having this discussion. I mean, what do you think? Is this a big polar shift in that digital asset? Because everybody, of course, the maxis, want a Bitcoin. And of course, there's the Ethereum people that think the same. But I think XRP is finally coming into its own. And I think the usages for XRP and what they've already cut for deals pretty much nails it down, George.
Well, nothing against the Bitcoin maxis. Listen, you got into Bitcoin early and you're supporting it. There's nothing wrong with that. But, Bitcoin will only go so far. So, XRP is going to be, I think, the next big one. How far it's going to go, that depends. But Lance, you've been saying this about these contracts as non-disclosure agreements, and I don't know if they can release them yet. If they're still done with the, finalize the paperwork.
They're not completely done with the SEC.
But when they start releasing those contracts and what you find, what the contracts they have with other countries, other big companies, it's going to, I think, going to skyrocket XRP because it's just going to show the value in it.
Yeah, I agree. Well, listen, let's switch gears. Of course, I want to talk about, this is one of the big stories for the week so far. You guys know about OM Coin. Of course, it crashed 90% in literally hours. Tons of fraud rumors circulating, tons of investigation rumors circulating. We're talking about the OM Coin on the Mantra blockchain. Their native token collapsed, and that was just hours on Sunday. That was a $72 million liquidation. A bunch of it was based on speculation of a rug pull or market manipulation. Although, of course, the co-founder, JP Mullen, is blaming reckless forced closures by centralized exchanges, which may very well be true. But, of course, that might be part of the market manipulation. Their market cap was $6 billion and 700 million. Of course, some people said they couldn't get out, that liquidity in the exchange wasn't allowing further redemption. So they might have even gone further. Let's throw up the chart on this. This is the opposite of a good candlestick pattern here. This is exactly what you don't want to see on an asset you own. It tanked ugly. So it went from $6.30 to 50 cents at one point. I know it's rebounded some. I'm not sure where it's at today. I probably should have checked. But that's 72 million in liquidations. And I think that's really, now the founders are blaming the centralized exchanges. The centralized exchanges are blaming the founders and other market makers. But man, talk about tokenomics that backfired here. I think, is it a rug pull? I don't know. Were these liquidations forced when all these exchanges started closing these traders' positions without consent because they said there was insufficient margin? Or is it just bad tokenomics? I don't know. This is what triggered this crash. I'm not sure anybody really knows, George.
No, I think it's, it's still got to look into it. But I mean, what they're trying to blame the exchanges, it could be negligence or strategic positioning by them. I mean, or potentially manipulating the market. I mean,
yeah,
this is a tough one, but
the emotions kicked into high gear on this one, George. I mean, your psychologist Cat must be going off on this.
I mean,
one.
look, OKX launched their own investigation. I mean, I'd rather see an outside company do the investigation. You know, let's get an audit done. Transparency. We always talk about that. Just like Solana Global is always transparent. You know, they have their audits to be transparent. So that's going to tell us if they do that. I mean, they should, whether they do it or not. If they deny to do something like that, that tells you something. So if they're open to doing an outside from a company doing an outside audit on this, then I'll keep an open mind. But if they don't, that means there's some nefarious things going on. There's some things about gambling even going on with them, right? On gambling sites?
Yeah. There's a lot of questions now. Some of the coordinated larger position exits are what people are talking about, because it seems like those people had some kind of preemptive information and they started exiting very early. You know, Antonio, we've talked about Terra, FTX, you know, our buddy SBF, and of course Celsius. This is a 90% drop in just hours, which of course, I think when things like this happen, it affects the entire market. Do you think we're witnessing another Terra Luna style collapse, or is there something different going on here? Is there more than meets the eye?
I mean, it's hard to say. Like on the surface, it certainly shares many of the characteristics of the Terra collapse, right? I mean, the red flags, price collapse, massive liquidations, and a lack of transparency really around tokenomics. But, you know, there are differences. The Terra collapse was kind of caused by an algorithmic failure. What we're seeing here appears to be, I'd say, you know, a mix of market structure fragility and potential manipulation. But it's key to point out that, you know, that's not been confirmed. As you say that, you know, Mantra's co-founder is blaming centralized exchanges. I don't know if that's just calling out, you know, the blame too much and trying to hide things. It's all just a bit up in the air for me as well. I don't have a solid judgment. I don't think any of us do really. But as you mentioned, George, you know, you've got major exchanges like OKX pushing back. They've flagged different tokenomics changes going back and forth as a bit suspicious. So I guess we'll just kind of see over time what happens in the coming days to see if we can say it's the same type of collapse as Terra. But at the moment, it's not looking good.
Lance, how long's they been on exchange, Mantra?
Oh, a while.
So because you brought up rug pull, so I wouldn't say I wouldn't use rug pull, because rug pull is something they do with meme coins where they do it right away. They build it up fast and boom, pull the rug from you. So I wouldn't. This is not. Well,
the only reason I applied the word rug pull in this situation is normally rug pulls are triggered by insiders. You know, so you know, is it clear cut like a meme coin rug pull? Not necessarily, because they've been around for a minute, but at the same time, the coordinated big transactional sales that seem to happen simultaneously from different wallets. That seems to be some kind of an organized operation behind the scenes. And of course, the coin wasn't really moving upwards a lot. It was kind of stabilized at this $6 and change. So the question that some people have put online that I read is, did the Mantra team say, well, it's not going up right now, we might as well take advantage of where the coin's at? Because a lot of insiders held pretty healthy wallets.
Well, if it's something like that, what you're just saying, yeah, that's something like it's an insider trading. It's a RICO Act on them guys if they did that, if they coordinated this.
Well, the legislation's not in place for that, because we still don't even have legislation on the rug pull. But I agree with what you're saying. I guess for me, online gambling has always been a little bit iffy as it is, George. We've seen some horrendous stories from the online gambling world, of course, where, you know, especially in the poker world, there were some big cases that went down. We've also heard some ugly stories about online gambling and taking advantage of the timing in sports betting, where the goal has already occurred or the kickoff has already occurred, and they run a few seconds behind long enough to figure out how to play the bets one way or the other in the odds.
Online, yeah. I mean, there's. I remember when there was online gambling, there was guys that developed software, put code in it so they could be able to cheat. They got away for years, even
the
with
poker world,
even with the lottery. It's been done with state lotteries.
Yeah, state lottery.
Yeah,
yeah. I'd like to get an insider for the Mega Millions. Wait till it's like a Billy, That sounds like a good deal.
They were doing it with lotteries, not like
we don't endorse it though.
But it was small.
We don't endorse it.
It was smaller amounts.
Hint, nudge, nudge. All right. So, okay. Well, here's the thing. I guess I think it is a red flag if the people are in the online gambling world. I don't know if I would. I don't own any of this token. I didn't invest in this project. So I guess it's let the buyer beware in this case, pay attention to what's going on and maybe veer away from the teams that have a bunch of online gambling expertise. Cause I always wonder if in their head, they're thinking about some of those lottery scams. This is a big bit of news I want to cover to make sure we get this in the time we have. DeFi, of course, just blew past centralized finance. A $19 billion lending surge signals that I think it's signaling a crypto power shift. DeFi lending just exploded, in the Q4 of 24, and we don't know what first quarter of 25 is looking like. 19.1 billion, nearly doubling centralized finance counterparts. We've seen some loaning against Bitcoin and Ethereum happening from some major institutions and banks and exchanges. I think this is a radical shift in borrower trust. To me, all this, when you look at capital inflows like this and the opportunity to borrow against crypto assets, this is big news here, don't you think, Antonia?
Yeah, I mean, it's a strong indication that trust is shifting from centralized platforms. I mean, the levels you've just said are kind of crazy, and it's like, what is that? The collapse of major CeFi players, does reveal, I think, some vulnerabilities, different issues with risk management, poor governance, and an over-reliance on user trust. I don't know. It's crazy that it's nearly double the amount, and I guess it just shows it's a clear showcase of how users are moving towards systems that offer greater visibility, control, and resilience. So I just think that we kind of knew this was happening anyway, but when you see something in numbers like that, it's hard to ignore.
Yeah, I mean, we're talking about peer-to-peer transactions without any intermediaries.
But look at the pluses about that. Yeah, it's decentralized, right? That's peer-to-peer, what you just said. So you go to CeFi, where it's centralized, you have institutions running it, exchanges, brokers. When you have brokers, you have fees, and it's time. It takes longer, and big fees. So when you can just take away those two things, and you have it decentralized, is what we have control. The people have control on the blockchain. That's the ultimate reason why we're doing this, right? We don't want.
I know. Sorry, I didn't mean to interrupt. No, it just surprises me because we know that, but I just didn't, maybe it's me being naive. I didn't realize myself that people were so willing to kind of, seize it themselves and take that ownership and responsibility, because everything you say, and which we all agree with on this show, is true, but it's just actually having that reflected in the market is pretty significant for me.
No, I think you're right. And I think, even though we haven't recovered, I know at the peak in 21, we were at 64 billion in lending across the board. We're only at 36.5 billion, but we're seeing it creeping up. We just saw the high reinvestment into XRP when everything else was getting sold off. And I think, the overall crypto lending market, even though it fell, it's clearly on an upswing. And I think you always have to look at those upswings. That the contraction, back when it actually contracted, most of that was about the collapse of centralized lenders and waning borrower demand. We're seeing an increase in borrower demand. We're seeing a lot of people trying to figure out how to monetize, not sell their assets, and how they can use it for a secured investment. Some mortgage companies are now considering crypto wallets in their mortgage approvals.
I have a question.
Which I think is a first in the banking world when it comes to mortgage-backed lending. Go ahead, George.
I didn't even realize this either. Now I'm just having a moment with the lending, DeFi versus CeFi. What is the difference in, if any, interest rates? Do we know?
That's a good question. I don't have an answer for that. I don't know. I would assume that anytime there's a secured asset, and if they're starting to consider crypto as a secured asset, you would always assume that the lending rates are going to be lower. Yeah. Although I would imagine it still exceeds normal banking. I think we're going to see more of it. Let's face it. there are lots of ways to use your crypto for staking and otherwise to get some crazy rates of return coming back to you. There are platforms out there that do it. We've seen returns anywhere from 10% all the way up to 30% if you're willing to stake and take your chances in the staking game. So, people are getting, that money market 2-3% is out the window. But, now that we've hit this number that quickly in the first quarter, which would, if it held true for the rest of the year, that would mean there's going to be almost $80 billion in lending. What do you think, Antonia? Is this a clear sign for the crypto users out there that they're losing trust in centralized platforms?
I mean, we've seen different chunks of signs over time, and this, I think, is just another layer to that. I think in answer to your question, the answer is yes. It's a clear sign because of the numbers we're seeing, but I don't think it operates in a vacuum. This has been coming for a while, and it's just another example, another number we can lean to show and reveal what shift is happening.
Yeah, I agree with you, but I think it all these signs together, when you start combining it as a big picture thinking, I think it does indicate that the public is becoming more and more comfortable, hopefully because they're watching shows like this. At the end of the day, the education is what makes people comfortable because, of course, this is brand new to so many individuals out there. George, what else? Anything else on that story you'd like to mention before we move on?
No, I think I'm good, I think.
Okay, and I think we're about out of time, aren't we? How much time do we have, buddy?
Yeah, we are. We're there. I didn't want to say it. I didn't want to be the party pooper, but you are.
Yeah, you didn't want to bring a good thing.
I didn't want to.
First me, now you, Lance.
I didn't want to.
What are we up to?
I didn't want to hurt Antonia's feelings and end the show because she likes to continue, but.
So not that she doesn't need some sleep.
Antonia, you are off the hook. Lance is a party pooper now because they always remember the last person to do it.
Sometimes I'm like that. I had one of those days anyway. On the early show today, you saw me running and gunning on the early, the Big Mig show over at Rumble, which of course is our primary show that George
I had to put him in the timeout. He was getting upset.
Yeah. So at the end of the day, here's what it is. If you like the Crypto Power, thumbs up, comment, share, like. Tell your friends and family. Bring them next time to watch the show. Let's educate everybody. Let's get a chance for some generational wealth. Let's spread the love and spread the word. Of course, in crypto, we trust. Don't forget to follow and subscribe. If you don't know about Crypto Power Hour over on X, you're missing out. Lots of great news stories, lots of great information. And of course, Solum Global on X. Don't forget to hit up Antonia Moss 47. Is that right? 47?
Nearly. What? 42.
42. Antonia Moss 42. I tried to give you Trump's number. Of course, georgeballoutine on X, Lance Miliaccio on X, and the Big Mig Show on X. Let people know. And don't forget to jump into Chris Pavlovski's account over on X and let them know. Say, we love the Crypto Power Hour. It's our favorite show. And that's why we're number one on Rumble, our home base. Rumble and Locals, we love you. We're out of here, George.
Oh, you always say George last word. All right, this is the end of the show. You all have a blessed day. We will catch you Friday, 3 p.m. Eastern on Rumble. Be there. Support us. We gotta keep moving on here in this show. With or without you? No, we got yous.